Good evening, I'm Sneha Koshi. Let's talk business. Benchmark indices snapped two-day winning streak to end with cuts of 0.3%. Nifty ends below 19,400 level, dragged by IT and metal stocks. Meanwhile, Midcap 100 index hit new high in today's trade. Hiral Dadia with the wrap of all the market action.
An interesting day of trade, and you have HDFC, which will be off the bourses from tomorrow now. In fact, the market snapped a two-day gaining streak, and it was mainly the HDFC twins as well as Infosys which pulled markets lower in today's session. Nifty ended below the crucial level of 19,400. The next support level is something we need to wait and watch. IT and metals were under pressure in today's session. However, you did have the Midcap 100 index, which actually hit a record high. If you talk about the breadth, pretty much in favor of the bears, but the last 15 minutes of trade is where we actually saw that major selling pressure that did come in. Throughout the day, we were trading in a narrow range of almost 100 points in terms of Nifty 50. ONGC, Eicher Motors, Nestle, Kotak Mahindra Bank as well as Sun Pharma, these were the top gainers in trade today, whereas on the losing end, you had names like Adani Enterprises, Infosys, Ultratech Cement, BPCL as well as Tata Motors. Let's quickly look at the newsmakers. On the 28% GST blow, you had online gaming players, Nazara Technologies and Delta Corp, which saw a major cut. Delta Corp was one of the biggest ones, over 20% kind of cuts. Marksans Pharma and Lupin surged in trade today, and this was on receiving US FDA drug approval for Marksans as well as a US FDA certification for one of its plants for Lupin. LG Equipments saw strong moves in today's session on the back of an order win. Bharti also acquired stake in a software networking company on the back of which we did some smart moves. BSE actually hit a 13-month high. Reliance, a fresh 52-week high, as well as Mascon Dog. And if you talk about Premier Explosives and Zen Technologies from the defense pack, that saw smart moves. So a lot of movers and shakers in trade today, a lot of stock-specific action, but the last hour trade, the last 15 minutes of trade is where we saw the selling pressure that did come in. Back to you.
And our current portfolio bent is large caps with focus on bottom-up stock picking strategy. That's the word coming in from BNP Paribas's Manishi Rai Chaudhary. In an interaction with BQ Prime's Neeraj Shah, Manishi says that the Indian portfolio is growth-focused with large caps, IT names dominating sectoral allocation. Let's listen in.
In case of India, we are still very much growth-focused. So I won't name stocks here, but the kind of sectors that we have are really consumer discretionaries, and that includes autos, particularly four-wheelers. We have healthcare, both pharmaceuticals and diagnostics. We also have the frontline private sector banks and insurance. And finally, and this is a non-consensus call, we do have TMT, which includes both telecommunication conglomerates and pure plays, and a smattering of tech as well. And I say this is non-consensus because both foreign institutions and domestic institutions have been underweight on the IT side for quite some time. But we think that after a severe underperformance over the past 1 year, the new orders that we are seeing for the frontline companies should eventually stand this sector in good stead.
So, and when do these orders, for example, start showing up in the numbers, Manishi? And what's the kind of, how do I say, optimism that you share here? And is it very bottom up here, or is it across the bucket?
This is very bottom up, because we track the order flows into the Indian IT companies on a monthly basis. And it's really, a select few possibly who are benefiting from the momentum of new orders. It is not yet quite a sector-wide phenomenon. I think, it should begin to show up in the numbers possibly late this year or early next year when the fourth quarter results begin to come through. But then again, to repeat myself, this is a very stock-specific kind of phenomenon that we are seeing today.
And India has been a prominent name in the emerging market portfolio with challenging valuations and an attractive broad market scenario. Portfolio managers are looking at the country with a keen eye. BQ Prime's Neeraj Shah spoke to Breakout Capital's Swanand Kelkar about India's position in an emerging market portfolio.
So when you are thinking of a portfolio approach, what's the preference that India gets in this consolidated EM portfolio, if you will?
So I think India is the place to go to in terms of stock picking in any emerging market portfolio today, right? I mean, a lot of people have, I'm sure, come to you as well. People write this in press that we are a sweet spot, we are, an island of calm, whatever. And that is true. If you look at any emerging market portfolio today, I think the incremental money is coming into India. You see that in the FII flows as well. And there are obviously two broad reasons to this. One is the reasons of exclusion. So what's happening in other parts of some of the other large parts of the emerging markets. And the other reason is obviously the bottom-up India story looks reasonably good. So I think India is a big part of our portfolio as well. And we are invested in India. I mean, one, because we understand this market really well, having been investors here for decades. But intrinsically as well, we think India is a good place to look for absolute returns over the next 2 to 3 years.
An IT major TCS's Q1 net profit surpasses estimate at 11,074 crore rupees, even as revenue sees mild uptick on a quarterly basis. Margins shrink to 23.16%, while albeit at rupees 13,755 crore misses estimate. Company announced an interim dividend of rupees 9 per share. And Wipro has unveiled $1 billion plan to leverage artificial intelligence just one day before the announcement of its first quarter earnings. Wipro plans to invest $1 billion over the next 3 years to help build new consulting capabilities. Tushardeep Singh gets us more details.
Wipro has unveiled a $1 billion plan to leverage AI just one day before the announcement of its first quarter earnings. Wipro plans to invest $1 billion over the next 3 years to help build new consulting capabilities. That's crucial since its $1.5 billion Capco acquisition deal in 2020 is yet to show any material gains. The spending also involves bringing 30,000 employees from cloud, data analytics, consulting and engineering teams together to embed the technology into all internal operations and solutions offered to clients. All Wipro employees, about 250,000 at last count, will be trained in AI fundamentals over the next 12 months. All this will be made possible by Wipro AI 360, an AI-first innovation ecosystem. What's interesting is that the AI investment has been announced just a day before the company's first quarter earnings. Generally, companies are in a so-called silent period before quarterly results. The company had warned of degrowth in the June quarter. Will the showing be any worse or better? We'll come to know only tomorrow.
And that's all we have for you in Let's Talk Business. Time for a short break.